Hi there, welcome to Kneppy Invest. Time for another financial year 23 results video. And in this video, we are going to be looking at a company called Aussie Broadband. Hopefully most of you watching this video knows what this company does. In fact, more than likely, there's going to be a few viewers of this video who are Aussie Broadband customers. Personally, I am not, but I wouldn't be surprised to see myself being a customer of this company in the next 5 or so years. Now, for full disclosure purposes, I am a shareholder of this company. And that's one of the reasons I am doing this video. Another reason I'll talk about in the next slide. Now, I do own shares in this company for the long term, or hopefully for the long term. So this is in my long-term portfolio. At the very least, it's in my medium-term portfolio. But I'm also trading shares in Aussie Broadband right now, and that'll become quite evident when we look at the chart. A beautiful chart developing, particularly in the short term, for Aussie Broadband. And the main reason the chart looks really good now is because of the financial year 23 results for the company. And in my opinion, the results were really good and showcase the potential of this company. So let's have a look at the financial year 23 results. But before we have a look at those results, what was the main catalyst for me recording this video right now at 9:45 a.m. on the 21st of September? At the end of trading every single day, without fail, I look at the top gainers and the top losers on the ASX on the day. And I usually rank the companies by market cap. So I think this is via Market Index. And I think, if I remember correctly, Market Index has the best 30 or 40 performing companies in terms of share price appreciation or depreciation. And then you can rank the companies by company name, share price increase or decrease on the day, but I typically rank them by market cap. So this is a rank of the 4 or 8 best performing companies by market cap. And by far, the best performing big company on the ASX on the 20th of September was Aussie Broadband, up only 5.7%, but the overall market was down about 0.5%. Not only that, in the past year, share price of Aussie Broadband has rallied 75.2%, which is quite astounding. Because if I could have bought more shares of Aussie Broadband at around about $2, I would have loved that. So I'm a shareholder of this company, and I've added to my holding in this company. I'm also trading shares in this company because of that potential and because of the chart. So now let's have a look at the financial year 23 results for Aussie Broadband. Revenue up to $788 million. That was a nice increase of 17% from last year. Haven't included EBITDA, but I'll talk about EBITDA right now. EBITDA of 89.6 million, which was up 52%. Now, I won't talk about guidance for financial year 24 later in the video. So I'll just mention the guidance now because they did have or provide some guidance for financial year 24, but the only metric they did provide was EBITDA. And they are guiding EBITDA to be between 100 and $110 million in financial year 24. Now onto profit, 21.7 million, which was a nice increase from last year, which was only 5.3 million. And I definitely think profit has a scope to significantly increase from 21.7 million, particularly when you look at the cash flow of this company. Before we have a look at the cash flow, gross margins up to 35.4%, and that has been increasing over the last few years. And I fully expect gross margins to increase further from here. Now, I'm going to talk about the different segments of Aussie Broadband. They have 4 segments: residential, business, enterprise and government, and wholesale. Lower margins, gross margins in residential and wholesale, much higher margins in business and enterprise and government. So if they can really increase the revenue in business, enterprise and government, that overall gross margin of the company should increase significantly from 35.4%. That remains to be seen if they can do that. Now to cash flow. Operating cash flow, 103.9 million. Significant increase from last year, which was only 25.9 million. But even more importantly, this company is now free cash flow positive. Last year, negative by 14.9 million. Now free cash flow positive by $64.9 million. So that operating cash flow and free cash flow significantly higher than the profit. And I might touch upon that later in the video. But if I don't, just have a look at their financial statements. And one of the reasons why profit is significantly lower than operating cash flow and free cash flow is because of depreciation and amortization. Now, between the end of the last slide and the start of this slide, I actually just wanted to confirm whether the discrepancy between profit and operating cash flow and free cash flow was because of depreciation amortization, and it was. about $40 million of depreciation and amortization. But there was also a significant increase in trades payable by over $40 million. So in fact, there was two factors of that discrepancy between profit and operating cash flow and free cash flow. Again, depreciation and amortization and an increase in trade payables. Now that we've got that across, we've made that clear. Bit of clarity is good. Equity up to 291.8 million, nice 8.6% increase from last year. And I fully expect, now I could be mistaken, this is just me making some assumptions, which is not always a good thing to do. I fully expect return on equity and return on invested capital to increase from where they are right now at 7.2 or 7.4%. In fact, I fully expect return on equity and return on invested capital to get above 10% over the next 2 to 3 years, possibly getting as high as 15%, which would mean the profit of this company should increase significantly from 20 or just over $20 million. Shares on issue, 239 million. And the markup of this company, 980 million, so hovering around that 1 billion, and that keeps on increasing. This company does have a little bit of debt, so about $200 million of net debt, which means enterprise value of Aussie Broadband is $1.1 billion. Now to some valuation metrics, and the P ratio of Aussie Broadband might seem high at 45.2, but again, I fully expect the margins of this company to increase, revenue to continue to increase, return on equity, return on invested capital to increase as well. So I would expect that profit of $20 million to be significantly higher in the next 3 or 4 years. It wouldn't be surprising to see profit move towards $100 million during that time, which would mean P ratio of 45.2 is actually low. And that is quite evident when we look at the EV to free cash flow, which is only 16.9. For a company with the potential of Aussie Broadband, that is actually quite low. Price to book ratio 3.4, that's sort of meaningless for this type of company. Also did a reverse DCF on the free cash flow. So what sort of increase in free cash flow would we want to see for me to get my expected returns, which is about 11% per year? So free cash flow would only have to increase at 8.4% per year. And I definitely think Aussie Broadband can hit those targets. Another thing I like to see when I look at any sort of company is capital expenditure. And I get particularly excited when a company breaks down the capital expenditure into 2 different segments or 2 different types, which is maintenance versus growth. Now, maintenance capital expenditure is much different than growth capital expenditure. Now, I have heard this from a few sources, from a few people, few experts, that if a company doesn't provide any sort of explanation of their capital expenditure, they don't break it down into maintenance and growth, then just assume it's 50-50. So when a company explains their capital expenditure and it's separated into those 2 areas, I do get excited. And Aussie Broadband did that in their presentation. So capital expenditure in financial year 23 was $49 million, $9.7 million for replacement, network and software, $9.4 million for fiber backbone, which to me is maintenance. So that's about $19.1 million on maintenance, but they're also spending $30 million on growth capital expenditure. So most of their capital expenditure is for growth reasons. Now to the financial history for Aussie Broadband. This is going back to 2017. So this is well before the company listed on the ASX. So we're going through, when a company IPOs, typically they will provide a few years of financial statements. So hopefully that's what Ticker has done here, TIKR. This is the platform I'm using to get their financial results. I don't fully 100% trust these platforms to provide absolute perfect information. So sometimes do look at these numbers with a grain of salt, but typically the numbers are going to be quite accurate, not always. Anyway, the main thing I'm looking for here is growth. So I would call Aussie Broadband a growth company and potentially a lot of growth in the future, and revenue's grown a fair bit. It keeps growing from year to year to year. Not only that, net income has gone from being below zero, so loss-making company, to being positive. So that has happened in the last few years. Also, free cash flow has been increasing as well. So everything is on the up for Aussie Broadband. Now to a few charts for Aussie Broadband, and we'll just be looking at some daily charts. This is their all-time chart. So from when they list on the ASX to now, and if you look at this chart, you'll notice there's three distinct periods. There's a good period when the share price went from about $1.80 all the way up to a high of $6. That was between the time they IPO'd and May 2022. So nice trend in the share price, positive sentiment behind this company. And then all it took was one negative announcement from the company that drove the share price into a downtrend and also shifted sentiment. And that negative sentiment drove the share price of this company from $6 down to below $2. So a 67% drop in share price because of one negative announcement. I'm not sure why the market overreacted, and I think this was an overreaction from the market. To say you could have bought shares in Aussie Broadband below $2 in about October 2022, so about 1 year ago, was just ridiculous. And I just wish I added way more shares back then, because the third period in Aussie Broadband's life on the ASX is from that low back in October 2022 to where we are now. And in the next slide, I'll show you the shorter or the zoomed in version of the daily chart, and you'll be able to see why I'm technically excited about this company right now and why I've taken a trading position. So this is the zoomed in version. And the low, this also includes the low in the share price back in October 2022, when the share price fell briefly below $2. It was only over a 2-day period, but then the share price rallied after that. So definitely $2 was a really good support level for this company. Now, it did look like sentiment was starting to shift positive back in the start of 2023, but then that positive sentiment sort of shifted more neutral or negative in May, June, and July. And then the share price started to move up again. In fact, I was waiting for the share price to get above about $3.40 because that was a high we saw in the share price back in March and April, May. So that was a nice little resistance level. And the share price zoomed way higher above that resistance level on the back of the company's financial year 23 results. So the results from this company were met quite enthusiastically by the market. And the share price pulled back a little bit, a beautiful test of that break in the resistance level. If the share price fell below that level for a very brief period of time, and over the past 2 weeks, the share price has taken off. So we have got that higher high, higher low as well. So this is the start and the makings of a new uptrend in a company. And the last time the share price was this high at $4.10 was way back in June of 2022. So we are now talking about a 15-month high in the share price. I probably should also mention that one of the things I also look at is volume. And we have seen a significant uptick in the volume over the past few weeks, particularly after the company released their financial year 23 results. And that's a good thing, because the thing that is driving the share price higher, the reason why the share price has moved into an uptrend, why there is positive sentiment around this company, is because fund managers are excited about this company again. That's all I have for this look at Aussie Broadband's financial year 23 results. Are you a shareholder of this company? Did you find the financial year 23 results to your satisfaction? Love to hear any sort of different opinions than my own. So I did really like the financial year 23 results. I thought they really showcased the promise of this company, but I'd love to hear anyone who has different thoughts. So if you do, leave your thoughts in this comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.